Good morning, everybody. Good morning and happy Monday. We'll get started here in just a minute. Thank you all for being here. All right. Yeah, welcome back. It's good to be back. And let us know quickly if you guys don't mind, if you can hear me okay. And you can see the screen. And then we're going to get started here in just a few seconds. All right. Good. All right, perfect. Good morning, everybody. Thanks for being here. Welcome back. We've gone past Thanksgiving holiday. If you're here for the first time here today, this is our Set the Market morning show. I'm Serge Berger from the Steady Trader. We do this show from about for about 10-15 minutes, Mondays through Thursdays, going through the most important charts. I've got my little red notebook here. And today we're going to look at some of the fresh monthly charts. This is a really important exercise that I like to do at the beginning of a month as we start looking at what transpired the previous month. So particularly for those of you guys that use our methodology of the market rover, what you of course are familiar with is trends, right? How to respect trends, how to follow trends, how to respect them when they start and when they're ending. And so, the trends is ultimately what dictate where a lot of the momentum and trades come from, for the most part. So as we look at the month of November, there are a few really important trends that have essentially reconfirmed. I was going to say reassert, but reconfirmed is probably a better way of saying that. And so what I want to show you is which sectors those were. So first of all, again, particularly if you're using the market rover, you've heard us talk about consumer discretionary stocks. And so consumer discretionary stocks, they remain in a bullish trend. We went bullish trend in August on those. That's the green background color. Notice how it went from a neutral background color into a green one. And since then, consumer discretionary sector as a sector is up 26%. And so when we now go over to the monthly chart, and now these are monthly bars, and we look at the XLY ETF, what you'll notice is that we're now finally breaking above the previous all-time highs in 2022, right? So this is now almost 3 years ago. 23, 24, yeah, almost a 3-year-old sort of consolidation phase has now come to an end in consumer discretionary. So I just would like everyone to be aware of this. The reason why it's important is because it goes against what, honestly, even from an economic top-down analysis, to me it doesn't make sense. However, the price dictates something else, and I think what the price is dictating here is basically too much liquidity in the market. Remember, central banks have lowered interest rates again recently. And that too much liquidity is translating into people chasing things higher. And we want to respect that, right? I do think this is going to end horribly badly at some point, but I don't know when. We'll find out when, right? And we'll get our signals before it happens, of course. But for the time being, we want to respect this. Remember, the year end, the month of December tends to be positive, and there is a caveat here, of course, as I've been saying all of last week, and I think even the week before, last week, 10-year yields, if they go above 4.7, 4.8, and the dollar continues strong, I think that will ultimately be a problem for the equity market. But again, outside of that, I suspect that the S&P can go higher still this year. If you think about some of these stocks within consumer discretionary, you look at Amazon. Again, we're looking at the monthly charts here. look at Amazon. Amazon just recently broke out of its 4-year consolidation period. And so from that perspective, something like Amazon through a multi-month lens can certainly go 10, 20% higher. So Amazon is within the consumer discretionary sector. So if you guys like this process, obviously if you're using in the market rover, which is what this process is all about, right? Looking at sectors, looking at industry groups, and then looking at individual stocks. So consumer discretionary, Amazon and Home Depot as well looks exactly the same as, and that's also a big stock within consumer discretionary, also breaking out, in this case, breaking out of a 3-year range. December 2021 is when we last saw these levels. So December 22, 23, 24. It's now 3 years in the making, this consolidation phase, and we're now breaking out. So we're now 5 minutes in after just giving you 2 trade ideas and 3 charts. Hopefully this is helpful, guys. Let us know. Give us a thumbs up, give us some comments, subscribe, anything, just to make sure that we get the feedback that we need to continuously make these shows better. So that's consumer discretionary. That's just one. I've got 2 more. What about energy? You guys know that energy is one of our main themes, higher inflation for longer. I think there's a lot of meat on that bone. It hasn't even really started, honestly. However, marginally, we are seeing the energy sector break higher. And we saw it on a monthly closing basis. We saw it on a monthly closing basis in November, more succinctly. So you can see it's happening. From a trend following perspective, it's actually not yet bullish. It's still neutral, because at the end of the day, again, this is a sector that's now gone sideways for 2.5 years. We haven't seen any new real momentum. A little bit of momentum, but not a trend continuation yet, but it's very close. I think if we get a decent December, we could start to see some real bullish trends emerge in energy, and you could ultimately see a huge trend in energy. And it's one of our core holdings in our higher inflation for longer portfolio. As well. And then here's one that's a bit more controversial, and I say controversial because it's, again, I think more of a chase than anything else, and this is small caps. Look, there's a lot of unprofitable companies in the Russell 2000, but on a monthly closing basis, the Russell 2000 has now also broken higher out of a 3-year consolidation phase. So that's the Russell. So let's repeat. So what has broken out on a monthly basis? Let me flip I'm supposed to flip these camera angles and make it more interactive. Anyway, so what's broken out? Let's recap so far. We're not done yet. We got a few more. Consumer discretionary as a sector on a monthly closing basis. Within that, Amazon and Home Depot. Okay, so that's 3 ideas right there to get you guys going this week. Hopefully this is helpful. That's 3 ideas. Then we talked about the Russell 2000. That's a 4th idea. This is purely at this point a momentum chase, right? The bullish trends are emerging. I don't know how many more months this can last, but it can last into the first quarter of next year, right? Just remember to watch the dollar and watch yields, because if those things go a lot higher, this will be over in a jiffy. So that's 4 or 5, whatever ideas we just mentioned. And energy as well. I think energy. That's another one. All right. Now, what about, I guess last but not least, what about Bitcoin and some of those other things? And remember, all this stuff is moving with liquidity. If there's too much liquidity in the market, too much money available, which I think is the case, you're going to start finding that money's going to find itself into ever more volatile assets. And so what we're seeing here is Bitcoin is the ultimate reflection of that. The month of November finally saw a break out and above a 3-year consolidation phase, right? That's a 3-year consolidation phase. And again, it rhymes with all the other ones, with energy, consumer discretionary, small caps, and then within that, a whole bunch of stuff. So if you ask me, what am I going to be watching here in the month of December? And what will I be watching if these breakouts fail? These things are top of mind, right? And if you're wondering what these things have in common, Well, small caps in Bitcoin is pretty clear. They're further out in the risk curve. That doesn't make them bad assets. That's not my point, but they're further out in the risk curve. What about consumer discretionary stocks? Well, that one's more difficult because Amazon's such a big holding, but it's a continuous bet on the consumer, on that K-shaped economy to continue to hold up. So if you guys have any questions, right now would be a great time to ask if you have anything at all. But I think this is a great way to start the week with this perspective. I can only encourage you to watch the monthly charts, to study the monthly charts, to have a process that takes them into account. So again, if you're an Inner Circle user and you use the Market Rover, you're digging into the different sectors or the different industry groups, right? We have watch lists for all this. This is a routine that I think everyone should be doing every single morning, every single week, and certainly on a monthly chart basis as well. So again, hope this was helpful. Great to be back. We'll see you guys back here tomorrow morning, Tuesday, at the same time. Please subscribe to the channel. It alerts you in real time when we go live with live analysis, and also hit the like button if you like, and get feedback. Right, we'd love to get feedback. Any way we can improve the morning show, the better. Thanks to all for being here, and have a great start to the week. Good to be back.